Consumer price inflation moderated to 6.8% year-on-year in October as expected, but still it remains above the upper tolerance band of the target. Core inflation is exhibiting stickiness. While headline inflation may ease through the rest of the year and in first quarter of 2023-24, it is expected to rule above the target. The medium-term inflation outlook is exposed to heightened uncertainties from geopolitical tensions, financial market volatility, and the rising incidence of weather-related disruptions. On balance, the MPC was of the view that further calibrated monetary policy action is warranted to keep inflation expectations anchored, break core inflation persistence, and contain second-round effects. I would read this sentence again. The MPC was of the view that further calibrated monetary policy is warranted to keep, number one, inflation expectations anchored, number two, break core inflation persistence, and number three, contain second-round effects. These actions will strengthen the medium-term growth prospects of the Indian economy. Accordingly, the MPC decided to increase the policy repo rate, as I have said, by 35 basis points to 6.25% and to remain focused on withdrawal of accommodation while supporting growth. As regards the stance of the monetary policy, the MPC took a holistic view of the policy rate and the liquidity conditions relative to inflation. Adjusted for inflation, the policy rate still remains accommodative. Over the next 12 months, inflation is expected to remain higher than 4% target. System liquidity remains in surplus with an average daily absorption under the liquidity adjustment facility, that is LAF, of 1.6 lakh crore in November this year. The overall monetary and liquidity conditions remain accommodative, and hence the MPC decided to remain focused on withdrawal of accommodation. I would now like to provide our assessment of growth and inflation. First, I will take up growth. According to the latest data released by the National Statistical Office, that is NSO, the real gross domestic product posted a growth of 6.3% year-on-year in the second quarter of this year, driven primarily by private consumption and investment. This also is in line with our expectations. Going into the third quarter of this year, economic activity continued to gain strength in the month of October. Urban consumption firmed up further, driven by sustained recovery in discretionary spending, especially on services such as travel, tourism, and hospitality. Passenger vehicle sales and domestic air passenger traffic posted robust year-on-year growth. Rural demand is recovering as reflected in the pace of tractor and retail two-wheeler sales, with rising farm activity. Investment activity is also gaining traction. Non-food bank credit, and this is something very important, non-food bank credit rose by rupees 10.6 lakh crore during April to November as compared with an increase of 1.9 lakh crore last year. The total flow of resources to the commercial sector expanded by rupees 14.7 lakh crore during this year up to November, as compared with rupees 6.8 lakh crore in the same period last year. On the other hand, the drag from net external demand further accentuated in October as merchandise exports contracted by 12.1% year-on-year, after expanding during the previous 19 months. Merchandise exports expanded by 10% in October. On the supply side, the agricultural sector remains resilient. Rabi sowing got off to a strong start. The area sown so far is 6.8% higher than the normal sown area, and this is the position as on 2nd December this year. The manufacturing PMI rose from 55.3 in October to 55.7 in November. The PMI for the services sector also expanded from 55.1 in October to 56.4 in November. Incidentally, both manufacturing and services PMIs for India in November are among the highest in the world. Construction activity is picking up after the end of the southwest monsoon, as indicated by high growth of steel consumption in the month of October. Going ahead, investment activity will get support from government capex. A pickup in share of fixed assets in total assets of manufacturing companies was visible in the first half of this year. I have given the data in the footnote of my statement, and the statement, as you know, will be uploaded in our website immediately after my statement is over. You could have a look at the numbers. According to our surveys, consumer confidence has further improved. I go on. Manufacturing and infrastructure sector firms are optimistic about the business outlook. Services sector firms also expect activity to expand. In an interconnected world, we cannot remain entirely decoupled from the adverse spillovers from global slowdown and its negative impact on our net exports and overall economic activity. The biggest risks to the outlook continue to be the headwinds emanating from protracted geopolitical tensions, global slowdown, and tightening global financial conditions. Taking these factors into consideration, real GDP growth for the current year, that is 2022-23, is projected at 6.8%, with the Q3 at 4.4% and Q4 at 4.2%. The risks are evenly balanced. Real GDP growth is projected at 7.1% in the first quarter of next financial year, that is 23-24, and 5.9% in the second quarter of the next financial year.
Well, that was the RBI governor making a statement on the hiked repo rate. But we are going to shift our focus back to the election the election countings that are going on over here in New Delhi. And we're getting you some more breaking news at this point in time, where the